Getting unqualified advice from property advisors, product fulfillment rep, family, friends, and colleagues.
Yep. So there's buyers agents, property coaches, and developers agents. And they talk about how many properties you can buy. They talk about building a scalable portfolio.
But buying 10 properties, paying your home in 7 years. They talk about saving tax through property or building a scalable $3 million portfolio. And then, there's also bankers who can't see the big picture and they only share about their product rather than the correct structuring and the implications of
so they fail to see the big picture altogether.
Yeah, they fail to show you the implications of what they're suggesting. And what no one considers is the finance strategy, your personal circumstances. And guys, while someone may say you can buy 10 properties, they're dishing out credit and financial planning advice so casually without knowing
your
circumstances or knowing what they're actually suggesting, if it's even possible.
Yeah, this leaves people confused and disappointed, and they're like, how can I build a property portfolio? How do people buy so many properties? Why are we stuck and unable to move forward? My friend got that rate. How can I get that rate? So in terms of what you need to consider, it's all about navigating the finance setup first. So you get the finance setup right. You seek specific credit advice relevant to your circumstances. That's what will enable you to move from one property to the next.
And it's not a get rich quick scheme. It's about time in the market and not timing the market. And you have to consider your circumstances, your income, dependent assets and liabilities. If someone else is able to do it, doesn't mean you would be able to, or you have been able to, doesn't mean someone else would be able to. It's not one size fits all.
Yeah.
And there's more to it than meets the eye. That's a tragic part of the property industry, unfortunately. And it's our biggest trigger point when we read this, the promises of, these people bought 10 properties. Did you know where they funded it from? Did you know their owner occupied was paid off? Or did you know their parents actually gave them the equity to do that?
Or did you know that their income that they generated actually helped them do that?
Yeah, maybe they had the income to do that. And one question I asked my actually now business mentor when in 2012 actually, and I said, XYZ buyer's agent said they own 80 houses. And he said, well, you don't know what their source of income is or what their income is to be able to do that. It's very simplistic to say that, but in practicality, you need to look at your own circumstances
and your finance set up, and so that you can make it happen.
So think and plan before you go and buy that property, and have an upfront strategy and take action as and when you're able to. This case study we want to go through is navigating lenders as you progress. It's about our clients Tanya and Chris. They're a couple in their late 30s. Both are scientists and their combined family income is $205K. So they bought their home in mid 2019 and they bought it for $855K. And we went to lender A. That's all where they could go at the time. That's all they could afford. And actually they paid lender's mortgage insurance at the time. Then in May 2021, we had a valuation, or the highest valuation we got was $1,050,000 with lender B. Refinanced and accessed $150K in equity. And that's when they actually bought their first property in mid 2021. I'll come to that in a moment. But we also went back to lender B again and said, can we value this property again? And this time their income situation had changed. Their income had increased. So we managed to get a valuation and able to access about $130K in equity for future investment property. So when they first tapped into the equity, they bought the first investment in mid 2021 for $480K, renting for $550 per week, loan of $384. And they needed about 117 odd thousand to complete this deal. When they bought this, we had to go to a non-bank lender because their borrowing wasn't evident and they had to pay a higher rate to service for the loan. But when the time came and their family income increased, we refinanced this property back to lender B to reduce the cost. So now their home and the first investment property were with lender B. And then they had enough equity already tapped into from their home, ready to go. And mid 2022, or recently, they've purchased another investment property with lender D, $502K, rented for $420 per week. They're putting 20% deposit. This lender D is a bank lender. And again, it was chosen because of their circumstances, maximizing the borrowing capacity. As you know, with rising interest rates, the borrowing is dropping.
It's a classic case of navigating lenders as you progress through your portfolio and tweaking things along. It's not about just going and getting a loan. It's about where does it fit? How does it enable you to move forward?
Well, you may have the equity and savings to just go in one go, buy lots of properties and choose the right lender. But with most people, it's a matter of a longer period of time of acquisition and navigating through the swings and roundabouts.
Also the property cycles, working with those, because it's not overnight, get rich quick. when equity increases, go and take that next plausible step for you.
Yeah, so it's not immediate. It's something that you need to navigate as you go. So anyone who just says, yeah, go buy 10 properties, well, maybe it's possible, but more often than not, you have to navigate it.